Right? So Article 5. Article 5, permanent establishment, very very important. And this article is also the last article of chapter 2. Chapter 2 is what? Chapter 2, when we were looking at the structure of the convention, chapter 2 was dealing with was titled as definitions. So 3 general definition, 4 the definition of resident, and now we have reached 5. So article 5 that actually defines permanent establishment, and then it's a very very elaborate article, 1 2 3 4 5 6 7 8 clauses, and it has got number of facets, number of aspects, number of variations, in the sense one of the most important articles in the entire Model Tax Convention, and then consequently in the tax treaties, and subject to extensive deliberation, extensive judicial scrutiny by the tax authorities. I mean, probably is one of the most hotly debated articles, right? Okay, and you would remember that I told you when I was having a discussion in the TP module, because we've had a discussion in TP module on the issue of 2010 report of OECD, the 2010 report of OECD that dealt with attribution of profits to permanent establishments. And the approach that OECD has delineated, has described in that report, 2010 report, is known as AOA approach, that is authorized OECD approach. And because this authorized OECD approach this portion is present in the syllabus of TP module as well. So I had a discussion of this 2010 report and the AOA approach in the TP module as well. Fine. So after today's class, all of you please go to the TP lectures, and you would find that this AOA, attribution of profits to permanent establishment, this would be towards the end. Please view that recording. Because ultimately we would be using that discussion. Although I would repeat, but then we would be using that discussion and that recording in the attribution of profits to permanent establishment when we will discuss Article 7. Because Article 5 will take care of a definition of the permanent establishment, whether you have a P or you don't have a P, and then subsequent and then variations. Fine. It is Article 7 which makes use of this concept of P. And Article 7 will tell you that if you have a P, how do you attribute profits to the P. Right? So remember, distributive articles 6 to 21, taxes on income. That is 6 to 21. 5 is still, you are still in the definition chapter. Chapter number 2. Chapter number 2 is definitions. Fine. So it is ultimately Article 7 which will make use of this concept of permanent establishment. P concept is used in other articles as well. I'm not saying this, but then yes, when you discuss business profits, the concept of P becomes very very important. Right? Concept of P becomes very very important. So let us come to Article 5. Article 5, and let's move ahead. 5.1 actually, I'll give you a general structure. 5.1 will give you a general definition. That's for the purposes of this convention. For the purposes of this convention, the term permanent establishment, P, the term permanent establishment, P. For the purposes of this convention, the term permanent establishment means a fixed place of business, through which business of an enterprise is wholly or partly carried on. Fixed place of business through which business of an enterprise is wholly or partly carried on. Simple one-liner definition, but then it has got several facets, several nuances. We'll take care of those nuances. Fine. So 5.1 is general definition. 5.2 will give you some instances that P includes branch, office, workshop, place of management, and so on. Some examples. 5.3 includes a concept, and that concept is known as project PE. Project PE. And project PE deals with what? Construction site, construction project, building site project. Fine. And it gives you a criteria that that installation or that construction will be a P, if that construction or those activities they carry on, they are continued for more than 12 months. So there is an activity duration threshold of 12 months. Right? I'm simply going through the structure. Right? Project P. Also, although the article 5.3 it doesn't use the word project PE, but then this is the normal, nomenclature which is used, and then you have a threshold of 12 months. Right? Project PE. 5.4 actually is a new article 2017. And 5.4 will give you certain activities 1, 2, 3, 4 and so on activities A, B, C, D, E, F. A to E and then F combination. A to E. It gives you certain activities, and then 5 is the combination of these certain activities: storage, display, delivery of merchandise, use of a place for processing of the merchandise, and so on. We'll go through that. It is saying that if any of these activities are carried on at a place, or combination of any of these activities is carried on at any place, then that place will not be a P. Will not be a P. Not be a P. Not be a P, but it will not be a P, or it will not be a PE only if these activities or the combination of these activities is only preparatory or auxiliary. Preparatory or auxiliary. Preparatory or auxiliary activities are those activities which are not related to the core business of the enterprise. Which are not related, which are not a part of the core business. They are only preparatory. The name itself, although preparatory and auxiliary is difficult, it's difficult to put difficult to ring fence that this is not preparatory, this is preparatory. But if you would understand the connotation in the context, you would find that preparatory and auxiliary definitely is not a part of the core activities. So if you find that only preparatory or auxiliary activities are being undertaken, then it is not a PE. And then you have 5.4.1. And then there are certain complications. Using these preparatory or auxiliary, using 5.4, that is why it is 5.4.1 na. So we'll take care of that, don't worry. Difficult to put into one word, but there are. Fine. So together this 5.4.154 na, this actually is a result of it. I mean, this was modified in 2017, and this was a result of BEPS action plan item number 7, artificial avoidance of PE status. BEPS action plan 7, artificial avoidance of PE status. Action plan 7, action 7. So this also is very important. Is very important because ultimately this leads as I told you, that BEPS action plan 7 gets reflected in this article. So 5.4, fine. You move to 5.5. 5.5 again, as a result of 2017 BEPS action 7. 5.5 deals with a concept which is known as dependent agent PE, DAPE, dependent agent PE. Earlier you had commissioners, now you have dependent agent PE, and then there are elaborate conditions. Dependent agent PE. 5.6 independent agent. This is dependent agent PE and this is independent agent. Right? 5.7 will say that a subsidiary, parent company ACO and you have subsidiary company, parent company is ACO, and ACO owns 70% of subco. Fine. So this 5.7 will say that subco will not automatically become a PE of ACO, and similarly and vice versa also. ACO will not automatically become a PE of subco, right? So that very important article. And then 5.8, associated. I mean, how do you find that association between the entities? So this is the structure. This is the structure of entire Article 5. You would see it's a very fairly long article, and even the commentaries are in the number of paragraphs. Fine. So with this given structure, 5.1 definition, 5.2 exam instances, 5.3 project PE, 5.4 preparatory and auxiliary activities, 5.4.1 then there's some issue, 5.5 dependent agent PE, 5.6 independent agent, 5.7 subs and parents, they do not automatically become P's of each other, and 5.8 associations. Fine. So with this, a very general overview of Article 5, let us move to Article 5.1. Fine.